How are we getting on, people? Luke here from LAGFX. We are back today with a new case study video. As requested by one of the viewers, I'm here today to provide you all with a full top-down analysis on the NAS 100. If you guys go on to enjoy this video, don't forget to leave it a thumbs up. All the support you guys provide is very much appreciated. And if you have any questions with regards to the analysis I go through today, then just leave them in the comments below and I'll get back to you as soon as possible. Now, as we all know, when we complete a full top-down analysis, it's best to start off looking at the monthly or the 3 monthly timeframes. This gives us an overall scope of the market and it helps distinguish a bias. Now, a bias is important as it gives us the information we need in order to trade with the prevailing trend. Now, we want to be trading with the prevailing trend as it gives us a higher probability of being successful when we do place our positions. Now, looking at the NASDAQ, we can see that quite evidently it's a bullish market, especially here on the monthly timeframes. If I go to the 3 months, you can see that again, it's very bullish. There is near to no bearish structure within this. Yes, we have a correction here and we have what looks to be another correction taking place as we speak. As we go down on the timeframes, we are going to dive deeper into the fractal nature of this structure and distinguish how we can take advantage of the market moving forward. So go into the weekly. As we can see, we obviously have our higher time frame structural points. This is the last low. Before this one here, we have a high and we have a higher high. Clear bullish structure. Now, as we go to more present time, looking more fractally at the structure that's being presented to us as of recent, you can see that we've had a break in the last protected low. Now, what does that mean for us? Well, that tells me that at the moment, there is more supply in the market than there is demand. And it also tells me that due to this, we may see a further correction to the downside. Now, in order for us to take advantage of this market, we obviously want to get involved with a refined entry. Now, as I mentioned at the start of the video, this market is very much a bullish one. So it would be a case of finding areas of interest for price to trade down and into, to pick up any remaining demand in order to push price to the upside, creating those new highs. So what we would essentially be taking part in short in this market would be the corrective wave before the new impulsive wave to the upside. So with us having our higher time frame bias in mind to go long, there is no harm in taking advantage of the corrective wave that price seems to be printing at the moment. So what I'm going to go ahead and do is actually mark out a hidden order block, and that presents itself here. We have a wick to the upside followed by a large bearish candle. So this tells me that there are buy orders here that may have been left unmitigated. Price may come to trade up and into this, deeming us a valid, more refined entry. Now, when it comes to a take profit target, I would probably be looking to set my take profit target 1 here, as this is a valid area of demand. Should price trade through this, absorbing this area of demand, we could look to place further short positions. But for now, I'm happy setting my take profit 1 at this place here. So now that we have a take profit target and we have an area to enter, you're probably wondering, well, when are we looking to enter and how do we see price playing out before we do enter in on this market? Well, as we have just recently broken structure to the downside, you can imagine that any remaining liquidity that has been left here, i.e. demand, will be absorbed, and that should encourage price to correct itself fractally within this higher time frame correction. So what I'm expecting is for price to actually begin trading us higher now, trading us up and into this area of interest. Once price trades in, any remaining supply will be introduced. Any demand that was absorbed from this area will be closed and removed from the market, giving us another S&D flip. This is when we will look to take part in our short position. Now, price may look something like this. So we are delivered with our fractal break of structure, which would present itself here. We then wait for price to pull back up again to give us a more refined entry. And this is where we'd be looking to get involved in. Now, you may be wondering, well, how do we know where price is going to pull back up and into for the second time? Well, we simply do what we've just done now, which is look at the impulsive wave, which is this one here, and would be this one here. And we distinguish another area of supply that price can trade up and into to give us our entry. And you can see that we are simply repeating the process. So once price trades up and into an area of supply that we find within the impulsive wave that broke the structure, that is when we'll be looking to get involved in this market, giving us the opportunity to get involved with a very refined entry. Yes, we could set our stop loss above here, but with us getting a more refined entry, we could actually set our stop loss just above the zone we get involved from. Our take profit would be set just above the zone we expect price to trade down and into. And as you can see, the risk to reward ratio that we are delivered with is quite generous, a 1 to 11. So for every 1% that you're risking in the market, we are looking at gaining 11% back. Now going back to the higher time frame bias, I would then expect that once price trades down and into this area, any supply that was picked up from this area and this area here would be removed from the market. People like myself will be taking profit and demand will be introduced. So a lot of bulls that are waiting to get involved in the next impulse would be activating their buy positions here. And that, in theory, should encourage the next wave to the upside. So we can then expect that new impulse to trade price higher, trading above the last high that was created, as that would be following the laws of bullish structure. Now, as we zoom out and we look at the overall bias of this market, you will see that it plays in line with our fractal analysis. As you can see, we have clear bullish structure. We are simply getting involved in the corrective wave that price has started to print. We would take profit when price has finished the corrective wave, and that's when we'll be looking to buy into this market following the prevailing trend. Now, we've been able to do this analysis here on the weekly timeframes, but when it comes down to our entry, we would be going down to the 1 hour and 30 minutes. And this is in order to get a more refined entry with the positions that we would be placing, taking this market short. So once price does trade into this zone, that's when we'd be going down to the 4 and 1 hour timeframes to look at the fractal structure that's been printed in from this corrective wave here. We'd be looking at the last protected low, waiting for that to break. That would give us the confirmation that enough supply is being absorbed here to trade price lower. After we've been delivered with that confirmation, we then go down again to our third bracket of timeframes, which would be the 30 and 15 minutes. And this is when we'd be waiting for a penetration of our more fractal supply zone and ultimately where we'd be entering in from. And this is the power of using multiple timeframes to not only distinguish a bias, not only complete our analysis, but also enter in on the market. We are essentially able to enter in on a higher time frame position with a fractal entry, allowing us to walk home with a very generous risk to reward ratio. Now, this top-down analysis and this case study video has been quite short and sweet, but I didn't really need to go down to the nitty-gritty timeframes. I didn't need to go down to the 5 and 15 minutes, as what's important is the higher timeframe scope of this market and where we see it heading over the course of the next month or two. As soon as we are delivered with confirmation to go short in this market, that's when we should be pressing that button. To build on our bias and the confluence we already have, it's always beneficial to look at the fundamental news and how the US economy is performing at the moment. What you'll notice is the US dollar is quite weak with everything that's going on at the moment, but it's always key to do your due diligence and do your research. Now, as I mentioned at the start of this video, if you guys have any questions with regards to this analysis today, any of the things that I've touched base on, then please leave them in the comments below. And if you have enjoyed this video, don't forget to leave it a thumbs up. Now, I just want to say a massive thank you for watching. I hope you guys have enjoyed, and I'll catch you all in our next video.